Hey, what's going on, everybody? It's John here. I do videos on investing. You're also going to see some videos in here on credit, on adventure travel, because I got to do something besides just work all the time, right? And then also you're going to see some adventure travel videos, and then you're going to see some doing more content. I've been talking about it, doing more content on short and medium term furnished vacation rentals, or just medium-term rentals, right? I've got 3 places I do that for here in Southern California. 2 of them I own, 1 of them I just manage, and we are pretty much right in the thick of super duper busy season. So you're going to see some more content on that. What do we have today? We've got an investing video. At the time of this recording, it is Tuesday, June 15th, and tomorrow there's a big Fed meeting. Tomorrow, Wednesday, there's a big Fed meeting, and inflation is on everybody's lips. So what are we doing? I've got a quick video. I'm going to go in. I kind of noticed Jim Cramer talking about, gotta love Jim Cramer. I've been watching him for over 20 years now, but basically, I saw Jim Cramer talking about senior growth stocks versus junior growth stocks, and I really liked it. And I've got my handy dandy spreadsheet where I'm going to actually go in and I'm going to show you all their numbers. And we're going to take a look at what Jim has to say in terms of what he thinks is going to be happening and going on with these senior and junior growth stocks in terms of how they're going to react to the Fed meeting tomorrow, Wednesday, June 16th. So without further ado, let's go ahead and hop right on into the clip and take a look at what old Jim has to say about these, and then I'm going to take you into my analysis. I don't really cover all of them. Like, for example, NVIDIA is in that category for his senior growth stock, and I actually don't really cover NVIDIA just yet, but I do cover most of them. So let's take a look at here with Jim.
Beaten down industrial aisle and start picking up bargains tomorrow, while the mess has still yet to be cleared. This group, not this group. But how about the aisles that are bustling? All right, what's there for you if you like me, you believe that inflation is running its course and the Fed knows what to do? Well, okay, so let me introduce you to these 2 terms. These are really what's driving a lot of stock market action right now, and a lot of people don't know them because they've gone out of style. I want to bring them back, all right? Right now, there are senior growth stocks and junior growth stocks. As much as I love the term FAANG, that is my acronym for Facebook, Amazon, Apple, Netflix, and Google, I think we need to broaden it out. Call them senior growth stocks, because there are so many other senior growth stocks that are now being put in the cart. For example, we had a big move in Adobe ahead of its earnings on Thursday. That counts. This stock, which had lost its lift not that long ago, actually hit its all-time high today. It better be good when it reports. Microsoft works. NVIDIA, right? And after a long dormancy, Salesforce is starting to run too. When the banks plummet, the money flows into the financial technology plays. Banking light, so to speak. So that means Square and PayPal see panic buying. Maybe fintech should have its own aisle. Then there are the junior growth stocks, smaller and faster growing than their senior components. Now, there's, for instance, these...
all you probably that are seeing this probably understand this, but when he says smaller and faster growing, the spirit of this is that the junior growth stocks, they're smaller market cap and they're faster growing. So if you can grab them when they're at a lower market cap, like I've been invested in Roku for I think almost 3 years now. If you can grab them with the lower the market cap, the better opportunity you have when they get bigger. So that's really where the opportunities are to really get the most out of your capital, right? When you're talking about 3xing, 5xing, 10xing your investment, you're going to be able to. That's going to be that's going to be achieved in the quickest time with the growth stocks that are growing faster and they have smaller market caps, like Roku, Etsy, and DocuSign.
By these stocks have been roaring. There's Twilio, the fantastic company that lets app developers push messages to the customers, among other things. There's Roku, which is the cord-cutting kingpin. CrowdStrike, we just had them on, right? They stopped crypto kleptos. Etsy, the online marketplace for all sorts of handcrafted goodness based in Brooklyn. And DocuSign, which has become the de facto way to close deals over the internet even after the pandemic. Junior growth stocks are beloved by Kathy Wood of ARK Invest, who had an incredible year in 2020 but was struggling in 2021 until recently. Often she seems to keep these stocks all by herself. Now, I am not against FAANG and friends. I've been a huge supporter of the senior growth stocks, especially Amazon. But I'm beginning to believe that it's time to examine the stocks in the godforsaken aisle where people keep slipping on copper and lumber and iron ore, because now those stocks are going down. If you think, as I do, that the Fed will keep the fires going, you want to own a steel stock or a heavy machinery player or a chemical company. Cleveland Cliffs, it was down $2 today. Could go down under 20. You got to probably buy it then. If Caterpillar comes to 200, I mean, come on, let's buy that one. Dow Chemical, good yield. I even sanctioned some energy stocks because many of these companies have changed their suboptimal ways. Chevron, Pioneer, even Exxon. These are the kinds of companies that thrive when economies around the world are growing. And that's exactly what I expect. But the bottom line, until we see the Fed's eyes on, and that's of course the whites of their eyes on Wednesday, you can expect the action to look like today, where we had lots of traffic in the junior and senior growth aisles with shoppers fleeing from the messy industrial and, yes, bank stock aisles.
There you go, everybody. Okay, so there you go. So there is Jim talking about the junior and senior growth. Here we are, the middle of June. It's the growth stocks, and basically the growth tech stocks have really were just hammered from the middle of February to end of March. Had pretty good April, and then really a very unimpressive May. And certainly this week it's been. I mean, it's only Tuesday, so basically yesterday they were actually did very well in terms of the trading day on Monday. But basically. What I'm going to do is I'm going to hop into the numbers that I have here so you can kind of stack them up and see how each of these look from a value perspective and really how they appear. I mean, he talked about how much he loves Amazon. Yeah, I mean, who doesn't love Amazon? But I mean, the fact is Amazon, I have, probably way too much Amazon exposure and I've been dying to get out of it. I just want to really get the right price for it, right? Just because I really want to, if I can, at least nail that 10x figure. At the time of this recording, it's 1.7 trillion. So yeah, I mean, Amazon could get up to Apple's valuation, I guess, but it's like, how much bigger is it going to go? I mean, I think Amazon is the kind of thing where it's good to have in the mix, but I really want to start shedding some Amazon so I can make way for more growth tech. These companies that are at 2 to 10 billion, and basically you ride up as they get bigger. For example, when I bought Netflix, which is my only 80x return investment. I bought Netflix when it was at a 3 billion market cap. You figure that 2 billion to 10 billion is that mid cap level, right? So I bought Netflix at about 3 billion, and at that time they had about 3 billion in annual sales. So the way that I look at things now is I try to find these companies, these growth companies, I call them turbo growth companies, when they are at when they have recently or are about to hit 1 billion in sales. And then, obviously, if I can get them while they're still a mid cap, below 10 billion, would love to do that. That's really not that easy to do. I would say that, trying to get them below 20 billion is probably the right time to do it. If you can get them between 2 and 10 billion, that's great. But it's certainly a lot easier said than done. But let's take a look at the handy dandy spreadsheet at some of these names. Let's first take a look at the junior growth that he mentioned. I don't have CrowdStrike in here, but I do certainly. One of my highest conviction name is Roku. I mean, Roku's come up a lot. Like with Roku, I've been into Roku pretty much around 2018, shortly after they IPO'd, and have believed in them for a while. And they also have recently, in full year 2020 is when they surpassed that billion in sales. And my spreadsheet, just so you know, it's actually organized. I organize it by, the most recently trailing 12 months or the most recently reported fiscal year of 12 months revenue from top to bottom. So, so it looks like, fiscal year for Roku 2019, they didn't hit $1 billion. And then for fiscal year, for 2020, they did, 1.778 billion. But basically, even now with Roku, I mean, they've got, this market cap of, basically about 50 billion. Let me just triple check here in terms of today. So 45 billion. So 45 billion market cap. Roku is pretty much my highest conviction name. Just love, 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 love Roku. But again, at 45 billion, I mean, I'm now looking to other opportunities to try to get in at lower market caps. I mean, the best returns I have on Roku are actually the Roku shares that I purchased in March of 2020 at different times all through March, and those have actually returns of 300%, so 3x, on Roku since March of 2020. But if you take a look at it, we got here, this last column is year-over-year revenue growth, 57%, almost 58% year-over-year revenue growth, which is actually, great there for Roku. Then we got DocuSign and Etsy. What's interesting is DocuSign is very, very similar to Roku. You take a look, they're a little bit lower in their year-over-year revenue growth, 46 points, so 47%, but both really, really high gross margins. DocuSign, one thing that, obviously, everybody knows DocuSign. The concept of taking your contracts and getting them digitally signed is a no-brainer, but 76% gross margins, very, very attractive. Not many companies have those, right? And then, you take a look at them, that they actually hit 1 billion in fiscal year 2019 and almost $1.5 billion in fiscal year 2020. And then the market cap of about 40 billion. So very similar in terms of size and growth and all that to Roku. And then you got Etsy. For some reason, Etsy has really not done well since they did their earnings release in mid-February of this year. I don't know why, because they got some of the highest revenue growth in all of my list here. And just so you know, I actually did recently come out with a kind of a document, I guess, where I've got about 45 stocks that are my turbo growth stocks, right? That I'm really kind of, honing in on there. I mean, I'm going to have Facebook and Google in there, but the ones that I really want to attack, which are going to be kind of my hot list, are going to be those that really hit that criteria, where they've recently or are about to hit $1 billion in sales. They got strong, gross profit in terms of gross profit percentages. They've got also strong year-over-year revenue growth, and they're they're basically just blowing up as a company, blowing up as a company. But Etsy just hasn't done well. I don't understand why, because I love, love, love Etsy. Very attractive valuation. Their gross profits into their market cap is pretty much one of the lowest in my group here. Very strong gross margins at 70%. Very strong year-over-year revenue growth. They did surpass 1 billion in sales in fiscal year 2020. They were at about just under $1 billion in fiscal year 2019. Yeah, there we go. Fiscal year 2019, and almost at $1 billion in gross profits in 2020. So again, I mean, Etsy just for some reason hasn't really done that well since February. So going back about 4 months. But they are on the top of my list in terms of favorites to basically 1 to 8x over the next 1 to 7 years. And then you take a look at the top ones. At this point, I mean, Square, they've got about $100 billion market cap, so that's pretty high. Certainly worthwhile. I mean, one that I really love that does have kind of a high market cap, but they're actually on tap to compete with Microsoft, is Salesforce.com, symbol CRM. I mean, their market cap is 227, but at the same time, they super, super high gross profit margin at 75+%, right? And growing pretty strong, right there at about 28.7, so about 30% year-over-year revenue growth. And obviously they bought what is that thing that they bought? Symbol work, Slack. They bought Slack. So they're on tap to actually compete with Microsoft. So if they do compete with Microsoft, I mean, you're looking at like, they could, if they went from 220 billion market cap up to 2.2 trillion, that'd be a 10x. I don't know how likely that is and what sort of time frame, but you figure it seems fairly reasonable that Salesforce could go from something like a 220 market cap to up to an 800 billion market cap, and that would be a great investment. So definitely love them. And then you got PayPal here. Already really high. I mean, PayPal at over $300 billion market cap, really high. They've done really well for me. Obviously, it's PayPal. And then Netflix. Netflix has been my biggest winner. I'm still holding strong with them. They have always kind of had a very similar 35 to 40% gross profit margin range. and they're at about a $215 billion market cap now. So, I mean, I don't really know. I mean, I'm keeping Netflix in the mix, but I'm not as excited about them, returning a lot as an investor at this point. I mean, because, yeah, I mean, they'll probably go up. I mean, certainly, it's hard to understand, kind of where they're going to top out at. Is Netflix going to hit $1 trillion? Probably in their lifetime. When they're all of a sudden every single country all around the globe is using Netflix, which is more likely than not that would happen, right? And then Facebook is one of the most interesting in the bunch there. They've got a very attractive valuation when you take a look at their gross profits into their total market cap. Microsoft, Apple, Alphabet, and Amazon. I don't really need to speak too much about these. You take a look at all their, all their revenues. You're looking at basically, over $1 trillion in revenue just for those top four. I mean, they are just the behemoths of the world. Not even our country. They're the behemoths of the world, but they are certainly the senior growth stocks. So there you go. There is the handy dandy spreadsheet. Hey, if you guys like that, if you like this value that I'm delivering in terms of analyzing, these junior and senior growth stocks, for me, holding on to the senior growth stocks is great. But really kind of trying to diversify and invest more into the junior growth stocks, or even the peewee growth stocks, right? I mean, in terms of junior and senior. I mean, I'm trying to get these at that 1 billion to 10 billion market cap range. I'm trying to enter the investment or add to the positions, right, at that 1 to 10 billion market cap, because the reality is that once you start, you're going to have the greatest chance of actually returning a higher performance to your original investment with the smaller ones, with the junior, the growth stocks. So if you like that, go ahead and give me a like, give me a subscribe. Basically, the channel is still pretty young. I cover a lot of stocks. Like I said, I've got a document where I've got 45 turbo growth stocks I'm coming out with. I'm also going to be doing a challenge where I've got people coming into the challenge where we're going to, again, do this challenge where we take this methodology, how I analyze growth stocks, and see who kind of does the best with it. That's coming out soon, but still I've got a document where it's going to be about 45 turbo growth stocks that fit this criteria. You are going to see Amazon and Google and all that in there, but the majority of them are going to be these groups that are around, have recently or around $1 billion in sales or more, or close to actually hitting that figure. And then I'm going to have kind of a hot list with that, where there'll be like maybe 7 to 10 of them that, where you could kind of 1 to 10x your investment in the next 1 to 7 years, right? So I'm going to have those documents, and, reach out to me, and shoot, I'll just send it to you when it's ready. But I'm going to put some links below where I do have some blueprints where I cover investing. I also cover generating income online, and I cover credit. I'll put the blueprints to the links to those blueprints in this description, as well as any new blueprints that I come out with. Everybody, I got a pretty deep background in investing. My first job out of college was Merrill Lynch. I also did investment banking after that. Then I worked for Sun America here in Los Angeles for 3 years. In addition, I'm also a good individual investor. I've got an 80x return on my Netflix shares purchased in 2011. I've got a 33x return on my Apple shares purchased in June of 2007, before the first iPhone came out. And then also I got a 10x return on Amazon purchased when their stock was down like $100 in one day back in 2014. I do actually have a bunch of 3Xs and 2Xs and 3Xs and 4Xs and 5Xs, but I'm not going to mention all those, right here. I'm not your financial advisor. I'm not a financial advisor. All this is for education and also for entertainment. So if you like it, like I said, give me a like. It's 100% free. Give me a subscribe. Put in the comments area if you want to hear if there's some growth stocks that I haven't covered that you'd like to hear more about, or if you'd like me to throw them into the handy dandy spreadsheet, or if you'd like just a general analysis on it. I'll gladly do it, because I need more, certainly videos for the channel. And I do a lot of certainly every time there's earnings release out for stocks that I follow or I actually have a position in, I'll do a video on that as well. Okay, thanks a lot, everybody. Have a great week, and let's see what happens with the Fed meeting tomorrow.